The US housing market is an absolute house of cards here in early 2022. We have never been in a bigger bubble in US housing market history. Both prices and rents today in early 2022 are higher than they were in inflation-adjusted terms in '06, and quite simply, Americans can't afford it. The only people profiting off this housing market bubble are real estate investors who are speculating in the housing bubble, but unfortunately, their time is coming to an end. New data shows that American renters have stopped paying their rent. And this is going to be a big problem for, number one, the housing market more broadly. It's going to cause a crash. But then number two, for real estate investors specifically, many of these real estate investors are going to start losing money on their investments. And there is going to be a mass sell-off of real estate investor properties over the next 12 months. If you're a home buyer, real estate investor, or renter who's trying to understand what to do next, you need to watch this video and look at this data so you can understand when the US housing market house of cards is set to collapse. And so we're going to start things off with a graph like we typically do on this channel, everyone. And what we're looking at here are the percentage of Americans who did not pay their rent each month. And this is data that comes from the National Multifamily Housing Council, a survey of over 11 million rental housing units in America. Did they pay their rent or not? And what do we see here in December 2021? A record number did not pay rent. And Americans not paying rent is a big problem for both the economy and the housing market, because it suggests that we're going to see a wave of evictions, foreclosures, and a mass sell-off out of the US housing market coming up in 2022, specifically in cities where real estate investors have started buying up all the homes. Well, those investors are going to start to take it on the chin. They're in for a rude awakening, and they're going to start selling at a loss very, very soon. Now, you might be asking yourself, why aren't Americans paying rent? This seems to be counter to everything you hear from realtors and real estate investors. All they tell you is that the rental market's so strong, that the housing market's going to continue appreciating, yet we have a record number of Americans not paying rent. Why is that the case? Well, it's very simple, folks. According to data from Zillow, the typical rent in America has gone up 14% over the last year, the highest level of all time by far. Meanwhile, the typical wage of the average worker has only gone up by about 5%. So rent is going up 3 times faster than worker wages. And this shouldn't happen, right? Rent shouldn't be able to go up 3 times faster than wages, but it is, mainly because real estate investors are piling into certain cities, buying up homes, pushing up prices, and then jacking up the rents so they can justify the sky-high price that they paid for the property. This is something we're seeing all across the US housing market, but specifically in certain cities where investors have just really gone nuts and are trying to basically profit off the renters in these cities. And unfortunately for these investors and these renters, it's not going to work out. We're already seeing that renters can't afford the rent. They've stopped paying, and this is going to get worse in 2022. Specifically in the metros in red on this map. These are the areas of the country where the rent has gone up the most over the last year, and you can see it's really in the Southeast, it's in Texas, and it's on the West Coast in mountain regions of America. Let's just take, for instance, Tampa, Florida. The typical rent in Tampa has gone from $1,570 a month to almost $2,000 a month in just a year, a 27% increase that locals in Tampa aren't even close to being able to afford. Another region where this is occurring is Atlanta. Rents in Atlanta have gone from $1,570 to $1,900 a month, a 21% increase. Phoenix is another area where this is also occurring. Rents have gone up by 25% in Phoenix, 24% in Las Vegas, 20% in Boise, Idaho, and 19% in Fresno. Real estate investors are one of the fundamental causes of these rental rate increases because, as I said before, they buy up homes, they buy up apartments at sky-high prices and then jack up the rent so they can justify the purchase price. The problem with that model is that there's no economic fundamentals justifying these rental rate increases. When you look at the levels of migration, job growth, and wage growth in all of those cities in red, they do not justify anywhere close to a 20% increase in rents, and that's why so many people have stopped paying rent in America, a trend that is just getting started. For instance, just take a look at how bad the situation is in a city like Austin, Texas, where we're comparing the orange line, the year-over-year increase in rent, to the blue line, the year-over-year increase in wages. And what we can see is that the wages have gone up in a pretty stable fashion, anywhere from 2 to 5% a year in Austin over the last half decade. For a while, the rent increase basically tracked the wage increase until the last 12 months, when rents are now up by 22% in Austin compared to only a 5% increase in wages. This gap is why people have stopped paying rent in a city like Austin. How about a place like Miami? We can see for the longest time, Miami had pretty low rent growth, right around 2 to 3% a year, and then wham, we're up to a 25% year-over-year increase in rent, while the wages are only up by about 5 to 7% year-over-year. This means renters in Miami are not able to afford it. That's why they've stopped paying rent. How about Atlanta, everyone, where the rent growth is 21%, yet the wage growth is only 2.4%. Literally, the rent in Atlanta is going up nearly 10 times faster than the wages. Now, back in August 2021, I put out a video on this very topic called "The Rental Bubble is Gonna Pop," where I predicted that these rent increases were not sustainable and that renters would stop paying rent and there would be a wave of evictions. Now we're seeing the data start to play that out. We have the highest level ever of non-payment of rent according to data from the NMHC that I showed you earlier. Meanwhile, data from Eviction Lab is showing that we are seeing a surge of evictions start to occur in certain parts of the country. And this is just going to get worse as we go further into 2022 because this housing market, this rental market is a complete illusion. It's a house of cards. It was never based off fundamentals. It was always based off speculation. And the biggest mistake I see real estate investors out there make is they try to delude themselves into thinking that this is a strong housing market. They say, oh, look at the 22% rent growth in Austin or the 24% rent growth in Miami. That means it's a healthy rental market. Wrong. The wages aren't even close to keeping up, and there is going to be a reckoning in the housing market in 2022 because of this. You cannot increase rent 25% on someone when their wages are up 3%. I mean, I guess you can do that, and many landlords are doing that, but they're going to have big problems going forward because their tenants are no longer paying the rent. They're going to move out. They're going to get evicted, and all of a sudden, a landlord is going to be stuck with a property they paid a sky-high price for that they can no longer rent out. They're going to start losing money, and they're going to start selling in a massive wave. This is going to be especially severe in cities like Atlanta and Phoenix, which have some of the highest share of investor demand in the housing market. Investors are buying up 35 to 40% of all the housing units in a place like Atlanta or Phoenix. They face the biggest risk in terms of this wave of evictions, in terms of this non-payment of rent, in terms of the inevitable selling and home price crash we're going to see in these speculative investor-driven markets. Now, one thing I want to address, and I think one thing that's on many of your minds is, how did we get here though? How did we get to a point where the rent's up 20% and the home prices are up 20%, yet the wages are only up 4 or 5%. How did we get here? And the answer is very simple. Government stimulus and intervention in the housing market. During the pandemic, the US government banned foreclosures and banned evictions. At the same time, they sent stimulus checks to people, deposited money in their bank account, and also extended unemployment assistance. All of these policies artificially stimulated housing and real estate demand in America, which is why you see price and rent growth so high right now. The problem is there was never anything sustainable or fundamental about that. And so many people buying a home or investment property today are making the mistake of believing that today's market is based off fundamentals, but it's not. It's based off the government stimulus and the low interest rate environment of the last 2 years. You can actually see this outlined in this non-payment of rent graph, where actually the best months we had in the last couple of years for payment of rent occurred from March 2021 to June 2021. Why was that? Well, those were the 3 months after the third stimulus check got sent to Americans. And that stimulus check was used to pay rent. But the problem is that the stimulus check merely just kicked the can down the road. And you can see now that the stimulus checks are going away and the rent's up and inflation's raging, Americans can't afford the rent anymore. So everyone, what you need to understand about this housing market in 2022 and this rental market is it is a complete house of cards. It is not supported by anything fundamental. There is not a single economic or demographic data point that supports any of this. And we're seeing that start to play out in the fact that tenants are no longer paying their rent. According to the US Census Bureau, 5.6 million people expect to be evicted or foreclosed on in the next several months, according to the US Census Household Pulse Survey. This is a big problem. And now that all the government intervention is gone, there's no more stimulus checks, there's no more eviction or a foreclosure moratorium, interest and mortgage rates are going up, we are going to begin to see the pain occur. And this is going to hit, unfortunately, renter households the most, but it's also going to hit real estate investors. Many of the investors who came in over the last year and are responsible for the speculation we're seeing in the market, they will lose money. If you're getting to the market today as a real estate investor, know there's a good chance you lose money, particularly in certain hot Sunbelt markets like Phoenix and Atlanta. There is massive pain coming, and it's just getting started. All right, everyone, I hope you all enjoyed this video. If you did, make sure to smash that like button, because this is a video that I had to make because I see so much misinformation out there about the housing market more generally, and then investors' role in the housing market. Like, so many people seem to think that investors can just buy and perpetually rent and increase rent. No, that's not the case. And we're seeing that play out. Tenants are on strike from paying these ridiculous rents in these hot Sunbelt markets that have gone up 25% over the last year. This will not end well. Also, please make sure to comment below. I want to hear your perspective on the housing market, particularly if you're a renter who had your rent jacked up. Let me know in the comments below, how much did they increase your rent? Where do you live? And were your wages able to keep up with that rental rate increase? I'm interested to see if your experience as a viewer of this channel aligns with the data that I showed you in this video. All right, everyone, until next time, this is Nick from Reventure Consulting signing off.